All right, so it looks like we might be live. Okay, perfect. Good morning, everyone. Happy Sunday. It's 10:30 a.m., July 12th. And as always, we try to do a equities wrap up for the previous week, what to look forward for the week ahead, and also some tips going into the next week from myself. And today, our guest speaker is Austin Ashraf. He's a former Citigroup portfolio manager. Welcome, Austin.
Hi, everybody.
How are you doing, Austin?
I'm doing fantastic.
Great to hear. It's hot and humid in Houston. Got it. So Austin, I just wanted to start off this video with just your thoughts on how last week went in terms of just the market overall, or if you saw any signs, in terms of the larger economical sense. What are your thoughts?
I mean, the market just keeps surprising everybody and keep marching ahead. And on as far as I'm concerned, on earnings basis, it just keeps getting more and more expensive. As far as S&P earnings are concerned, But as I've been saying from the start, that a lot of stuff out there is noise. Just as focus on what Fed is saying and what Fed is doing, and this unbelievable liquidity and the interest rates at 0.6 on the 10-year Treasury, where the yield on S&P, dividend yield on S&P is 3 times of what you can get, and that is just a very, very positive environment for the stocks. That doesn't mean the next week or the following week the market would not pull back 10 to 15%. That's just part of the game. So I've been as the market's moving up, I've been slowly and gradually getting lighter and lighter on the long side, and looking for next opportunities to increase my positions again.
So in this particular instance, as you mentioned, as the market keeps trickling up, you're a little bit concerned about the valuations of stocks, and you said you want to trim down your long positions. Are you factoring in the fact that the market seems in this irrational exuberance phase and there's just too much euphoria or fear of missing out there? Is that why you're a bit concerned?
No, not really. I mean, I don't see the euphoria that most people see. Actually, the lot of hedge funds that I talk to, they have really missed this rally, and they're sitting on a lot of cash, looking for an opportunity to get back in. And the market has this funny way of doing the opposite, not letting you get back in easily, So and even today, the short positions are from hedge funds at very historically high levels.
Yeah, I thought that was interesting too, because I saw Tesla itself had some of the highest short positions, ever in its history. I just thought that was really strange, because that kind of just tells me that, well, Tesla's ripe for, another squeeze to the upside.
I agree.
Yeah. Now, speaking of hedge funds and institutions that are, that have kind of missed the boat, I was reading about the ETF inflows of 2020, and going along with your point, the ETF inflows are now almost back to 2019 levels, even within the context of this pandemic, what is seemingly a bit more of a struggling economy. What do you make of that?
Yeah, I mean, it's just historically what you see is majority of the people will buy the market at the wrong time and sell the market at the wrong time. So I'm not surprised as the markets keep pushing higher, retail investors are slowly coming back into the market. But it's just a natural phenomenon.
Yeah.
And
Yeah.
people, and if the market pulls back 15%, a lot of these people will be selling the market again at the bottom. So that's how it goes.
That's a good point. Now, I want to just jump into coronavirus and its impact on states. Um, did you, first of all, think that it was, well, we discussed this a couple weeks back where I mentioned to you and Faisal that the fact that the infections were going up and the death count wasn't rising does not necessarily mean that the deaths aren't going to rise in the near future. It was merely the fact that deaths are really just a lagging indicator. And so now we're actually seeing the death count climb up. Do you think that that could spell potentially maybe a similar kind of event in the economy? Because it seems like you're pretty bullish no matter what. So I guess my question is, at what point do you think that, the stock market could get shaken, if at all?
Uh, it could get shaken. I mean, to me, market pullback 10 to 15% is just a normal course of corrections in the market, and market may find an excuse in this data. But what I pay attention to most is the death rate among the young people
Yeah.
continues to flatten out, and and uh, and as a country, we're learning to live with this virus. And that's what market is telling you. Remember, market is a forward-looking indicator, and as the market push higher, it is digesting all this news that we know, and we just react to it.
Yeah.
But the big players, they have already got their models, and they know where to buy the market and what they're thinking. So prices are telling you everything.
That's actually a great point. I was actually going to start off this video with a funny meme, which was this meme right here. I think the greatest thing about having Twitter or Instagram or any of these social media platforms is they call it like they see it, right? What you basically see is a mother who's a Fed supporting the stock market, the child, and you see value investors who are just sinking deeper and deeper into water. Um, I thought that meme was very apt and appropriate for the market right now, because what we've seen to kind of entered into is a phase of the stock market completely disconnected from the economic reality for many. And I think, we obviously know that the stock market has significantly benefited the rich and wealthy, especially those that are running corporations, CEOs, shareholders, etc. Are you at all concerned about the fact that the people who have lost their jobs, the businesses that have shut down temporarily or potentially permanently, are at some point going to be factored into the stock market, into the GDP? Or do you think that this disconnect of reality will perpetually be unavoidable because the Fed is effectively just going to keep supporting the market?
Yeah, I mean, Fed has basically told you that no matter what, they will just keep printing money until the cows come home, until they get the unemployment numbers at a reasonable level. But I'll tell you, listeners, that one thing to remember is market predicts the economy. Economy does not predict the market. And stop and think about that. Okay, so what market is telling you is that a year from now, the economy is going to be in much better shape, and on incremental basis, the things are looking slightly better than a week before. So market is predicting something, and you can't take that lightly. as an
Yeah,
investor.
I think that's a solid point. I agree. I agree. Um, let's get into some of the stocks that I was kind of looking at last week and for the week ahead. Before this call, I was telling you about bank stocks, especially the regional banks. Are you at all concerned going into the week ahead? With bank earnings coming out and financials overall still struggling. I guess how do you first of all read the market based on the financial stocks, and are you even investing in financials?
First of all, I'm not involved with banks. I'm more of a growth investor. Uh, Second point that I would make is that with the current yield curve, it is a very difficult environment for banks to make money. And but on the other hand, valuations on banks are at historically low level. So maybe if your time horizon is longer than a year, you know, as the economy comes back and you start to see, I mean, the Fed has already told you that they're in no hurry to raise rates. But if economy GDP bounces back next year, first quarter of next year, they might start to take some of the stimulus out of the market, and rate may start to slightly go up, and that would be a very good environment for the banks. And I think bank stocks would react to that. But right now, what banks are telling you is, hey, rates are going nowhere.
Yeah, that's a great point. Speaking of banks and our Fed, I thought it was really interesting that the Fed is sort of reducing their balance sheet, but even in the context of the recent reductions that we've seen, as you can see on my screen, it seems like it's kind of just a blink that the um, the Fed kind of backed off the market only by $250 billion. But as soon
Yeah.
as they did that, um, the market did pull back aggressively, last week, but again, got bought back up even faster. What do you make of that?
Yeah, exactly the same thing that you know uh, the market is watching the liquidity in the market from the Fed, and I noticed that too. That as I saw that uh, they had taken slight action uh, as far as their balance sheet is concerned, the market kind of stalled. But there's still a lot of cash on the sidelines. As I was saying earlier, that a lot of very smart people have missed this market move, and they're sitting in cash, and every opportunity they get, uh, they are putting money back to work. And now their time horizon is somewhat a little bit longer. They're discounting uh, earnings through 2021. So I really think that this is what you're going to see on every pullback. You will see money come back into the market, uh, and one of the things that's happening that I'm noticing that a lot of efficiency of especially S&P companies uh, is going to be surprisingly better. And what that means is a lot of these jobs may not come back, and people will have to be, then the government's responsibility will be to retrain these people, and uh, for the jobs of the future. So that cycle starts again.
Yeah, I think that's definitely a big concern among a lot of people. I would say, the fact that I don't think a lot of people realize that some of these jobs actually may not come back. And the whole discussion about China, the U.S. relations with China deteriorating, or America potentially bringing back its supply chains back into America. even if they do, even if they bring back manufacturing jobs, it's not like you're going to fill up the void and the gap of the jobs that we've lost, because a lot of those jobs are probably going to be, automatic or robotic based, right? So it's not
I
like you
agree.
can, right. So I think that's a moot conversation, because, it doesn't make any sense that just because we're bringing back the supply chains, we're going to get all these jobs back. I really don't think so. I feel like gone are the days where you need, 10 people on a production line, right?
I agree.
Yeah. So let's keep moving on. I opened up this video, with a topic of, some of the three best trades, at least for Q3 or rest of 2020. One of my favorite trades, even, right around March when this whole coronavirus thing happened, the first thing that I looked at was gold. I think gold by far is probably one of your best trades, because whether it's in an inflationary or deflationary environment, recessionary environment, I think gold will definitely perform well going into the rest of the year. And I don't see, first of all, any reason that gold will be under 2000 by the end of the year. And not only that, it performs well, in inflationary, deflationary environments. Um, and with the government kind of printing all this money, the dollar is largely unmoved. Did you think that was strange, by the way, that the dollar, for the most part, with all the printing that's happened, is pretty much back where it was pre-corona?
Well, you remember that what dollar is reacting to is that almost every central bank around the world, US is no different. They are all jacking up their balance sheets, and they're all printing money as fast as they can. And so naturally, dollar becomes the best house in the worst neighborhood. So it will have a natural support, you know. So I think that's what's going on. That where would you go? What currency looks better than the U.S.? And you know, as everybody is trying to devalue their currencies. So
That's a great point, because obviously Europe is doing that. Japan is doing that in many ways. It's been doing that for a while. Um, I think I just think it's interesting because the dollar itself is so, well, at least for many countries that have dollar denominated debt that utilize. I was reading that 79.6% of all global trade um, is actually transacted in dollars. And I thought, wow, that's an amazing, I mean, feature of the dollar. But what does that mean if, let's just say, the dollar ticks up from here, or let's just say it breaks down to 75 or 80? I guess what would that mean for other nations, other countries, other economies that are doing trade with the United States?
yeah, I mean, absolutely. But remember, uh, dollar is a very important currency in the world, and in the U.S., our central bank pays a lot of attention to what the currency does. We are the big dog, and we basically you know can look at the global economies, and we know that if the dollar runs up, it's going to really, really hurt these emerging markets, uh, especially most of them have their debt in US denomination. So if they get hurt, their buying power goes down, and that hurts the corporate America. So in the end, it is in best interest of the global economies and the US to make sure there is stability, and the move in dollar is appropriate.
Yeah, yeah, I would agree with that. So yeah, anyway, I just wanted to go back to that point of gold, because I actually want to get your thoughts about the dollar, because I was kind of confused, the fact that dollar has, I mean, we printed so much money, yet the dollar is kind of
Yep.
unmoved. And
Yep.
in the same token, I thought, well, I mean, if we're printing all this money, I don't see any reason why gold should not be going up. And it actually did break out, pretty much end of June, and it's just ticking up, nice, taking the stairs up. You know.
Yeah, I mean, the gold moves up or down based on perception. To me, gold really has the intrinsic value is a lot lower. So right now, the investors agree with this point that there is no end to how much money we're going to print. You know, so as long as this printing press goes on, uh, that's what people are doing. They think that a dollar as a hedge. I mean, not dollar, but gold. You know, but I think that once the vaccine is developed, once we have some sort of solution on the other side of these crises, uh, people will change again. People perception will change again. I'm not really a bull or bear on gold. I hardly ever trade gold, uh, but that's what I'm thinking. That people right now don't have a whole lot of hedges.
Yeah.
We are in this environment where interest rates are practically down to zero, and so people have lost their natural hedges. So either they're going, and that's why VIX is staying up so high. Either people are going out and buying S&P puts to hedge their portfolios, or they're buying gold to hedge their portfolios. Uh, and so how long with this goes on, I have no idea.
Fair point. Let's move on to some other stocks. Last week, I guess a week and a half ago, I picked up Uber right around 29.3, and so far it's done a pretty fantastic job. Uber also acquired Postmates. I mean, I had talked about Uber like a couple of weeks ago. I think in the next 3 to 5 years, I don't see why Uber cannot be a 10x company from where it is right now. I think they are very much primed to be in partnership with, say, Tesla or any of these electrical vehicles to work in the autonomous vehicle space, whether it's to move passengers and customers from point A to point B, or maybe even get into the commercial side where they might be part of distribution networks. Did you think, first of all, that the Postmates acquisition was important and impactful? And what are your thoughts on Uber?
As I think I mentioned I think a couple of weeks ago, that as soon as we have autonomous cars on the road, that will be a game changer for Uber. And this acquisition is really in part of their long-term strategy. Elon Musk tweeted, I think, a couple of days ago, he thinks that we will have fully autonomous cars by 2024. I know he has been making these predictions before, but if that is true, I totally agree with you. I think Uber could be a 5 or 6 bagger. Uber is going to benefit tremendously because their biggest cost is, hiring and maintaining these drivers.
Yeah, yeah, yeah. That's what I personally think. I mean, Uber is one of those trades where it seems like we're already heading in that direction. I think the one thing that this pandemic has taught anyone is the direction in which the world was already going. It seems to have accelerated even faster.
No
So, for
doubt about it.
example, I think Zoom. I think we all knew that Zoom was already going to be a good company. We didn't know it was going to be this great or this highly valued, but we knew that work from home was already kind of a everyday routine for a lot of people in the tech space. Whether you're an engineer or someone in software engineering, just basic desktop support, anything. I mean, you can do the remote work quite a bit, especially if you're in the tech space. And given the fact that America has all these tech companies, even my mother, she has been working from home pretty much since late March now, and she's an accountant. I mean, so you could see the world was already heading into that direction. And by the way, she had been working from home on Fridays for like 2 years now. So the world was already heading in that direction. We also know, in terms of Uber, we know that the world is headed towards autonomous cars. Um, Humans are, generally just very creatures of habit. We like to also have convenience as much as possible. So we like to have things delivered. Amazon has, made us all lazy to the point where we don't really even want to go to Walmart. I can order something and it can be delivered to me with my Amazon Prime membership in less than 2 hours, or 4 hours at most. So it's like, I think about it and I say, well, what is actually going to stop companies like Uber and Tesla? I mean, there's really nothing. There's nothing that can stop them other than the fact that it might just be a slight delay in how the autonomous cars function in regular society. But it's inevitable.
Exactly. I mean, what you just said, it is so important to understand that how important technology has become in our daily lives, and how dependent we are. That's why I think there are just unbelievable opportunities to make or create wealth over the next 5 to 10 years, investing in the right technology companies. I think that we are still in very early innings of a major run in these tech stocks. So you know, you just said it, that how technology is making us more efficient, how technology is starting to drive our lives a lot more than they did before. And I,
Yeah.
and I see Amazon boxes every day in front of my house, every day. We're buying literally anything and everything from Amazon. Uh, and that behavior is not going to change.
Yeah, I totally agree. Let's dive into a little bit more about autonomous vehicles and electrical vehicles, because we discussed a couple of weeks ago about the SPACs, which it's a different form of investment, the special purpose acquisition companies. You
Correct.
don't have to go through the same process of IPOs, and it seems like SPACs are becoming more and more prevalent, and more people are actually getting behind that kind of model. Bill Ackman, I know, is very heavily involved in SPACs. um, Nikola is one company that is a SPAC based model. So given that these electrical vehicles are going through the SPAC model, do you think that there are companies out there, or have you sort of researched into companies out there that could rival Tesla, could be the next Tesla, if at all?
Um, no, really, I haven't paid a whole lot of attention in that space, and I should. Uh, Remember, I'm retired, so I'm not as active as I used to be. Uh, but I do believe that in the next 2 to 3 years, majority of the cars on the road are going to be electric, EV cars, and that will change uh, the basic dynamics. You know, uh, think about how that industry is about to disrupt some of the largest industries, which is auto parts. And
Yeah.
in the EV, you would not need to have all those parts. You have billions and billions of dollars worth of market cap companies out there that will be so quickly disrupted. So I'm paying a lot more attention to that, as to building short positions long term in these auto part companies. As we move forward, the key to EV cars is basically the cost of long running batteries, and the cost just keeps coming down dramatically. you know. So I think that the EV is going to take over a lot faster than even people think.
Yeah. I think one of the companies that we were looking at that's called Rivian, which actually has a $2.5 billion investment led by T. Rowe Price, and it seems like Amazon and BlackRock are also invested in it. So just something for our viewers to maybe go do some research on. The
Yeah,
name of the company is Rivian.
I agree.
Um, the other company, you and I spoke about this company last year, Palantir. I think it's a Peter Thiel led venture, has like a $26 billion valuation. It's a data mining practices company, has some government contracts. Have you done some research on that? And if so, what are your thoughts?
No, I mean, I love the sector. I think data mining companies are uh, going to be a very important part of the portfolio. So I own a bunch of companies like Splunk and ESTC and one other company. I can't remember the name of it. So you know, no, I think it's just AI and data mining companies. This is you can't not pay attention to that sector.
Yeah,
And
fair point.
I have not. I've read about the Plantier, and I'm looking forward to the IPO. And if I get a chance, I think what I've seen so far sounds really good to me.
Yeah, I think same for myself. I think coming out of the tech space, out of college, I think it was almost inevitable, just like what you were talking about, electrical vehicles or online meeting platforms like Zoom. Data is so centered in our lives in so many different ways that's very hard to realize all the innovation that goes behind these data mining companies, or even companies, sub companies like AWS, right? We don't realize how much data goes into our everyday lives of interaction, whether it's on Facebook to marketing and advertising, even in the healthcare space. There's just so much happening, and I can't imagine a world where companies like Palantir won't be, some of the front runners in the next, decade.
I agree, and I think we're in such an early innings of the whole thing that I think about a year ago I was at a conference, and there were a lot of consumer companies presenting. And one thing I noticed that these people were just starting to look at data mining, starting to use these tools. And one guy said, "Hey, what we have seen in our study over the last 6 months is that if we do not get on top of this trend using AI and data mining, we'll be out of business." You know,
Yeah.
so I think that, and even today, our ability to effectively use all the data that is being produced right now is minuscule. As the tools on AI gets better, there's just this thing is going to, the whole industry is going to rip.
Yeah, I totally agree. And I think I wanted to point out to our members that another trade or ETF that I'm always paying attention to is ARK, ARK Invest. They have, I think, different parts for their ETF, like I think robotics, genomics,
Yeah.
electrical vehicles. I think they're pretty much they're invested in some of the most cutting edge technologies, even blockchain. So for our viewers who are watching, I think definitely pay attention to ARK Invest. Within ARK Invest, I also thought that this company that they're invested in, Virgin Galactic, supposedly it's going to one day take people to space. It might even be potentially mining asteroids. Any thoughts on this, or do you think this is just too far away to think about?
No, I actually own it. I think it's one of those companies you want to, you know, be careful because it's a very early technology company. You know, the kind of things that, but this could be the kind of stock that go up 200% or 300% or 1,000%. You know, so what they're doing is so amazing. I just read up on it a little bit, and it was so fascinating. You know, this industry is going to create so many jobs in the future, and you know, the more I read about this company, the more fascinated I get. But the trick to owning a stock like uh, uh, the Galactic, what is it? What's the
Virgin Galactic.
Yeah, Virgin Galactic, is you buy a small position and add position to it. Don't buy so much that you cannot hold the stock on through any serious correction. So buy a little bit that you can handle, even if the stock goes down 50%, you know, that you can handle it. At that point, be prepared to buy some more, you know. But I believe in what's going on, and I think eventually some other company it will acquire these guys because they are building technology, and which is just a, you know, Star Trek type of technology, you know. So I'm with you. I bought some stock at 15, and I'm looking to add to this position every time the stock goes down.
Yeah, yeah. No, it's definitely one of the most innovative companies that we've seen in a while. It's almost like Tesla-esque, you know, in the early 2010s. So I'm definitely looking forward to it. Um, Let me see here if there's anything else we need to talk about from our members. Let's see here. Gold we talked about already. Make sure you guys go check that out. Oh, what did you think about the Nasdaq and the Qs? I mean, they just keep ripping up. Do you think that, you know, for now, it's not even worth shorting the Qs, or do you think that it might be time to, if people are watching right now, do you go into the ETF itself, or do you kind of go into individual companies?
You know, like we've been talking about, the technology is going to drive the next phase of the growth, and even a more meaningful phase. So to me, you know, I rather, if you're going to short something, short IWM, which is a small cap, uh, and there's a lot of value type of stocks in it, you know. And in this environment where the growth is going to be very limited, short term, at least for another year or so, you know, people will continue to buy growth, which is all tech. I don't see a whole lot of growth in any other sector other than healthcare, you know. So to me, just if you're gonna short anything, just think about shorting small caps.
Yeah, fair point. Um, so there's a question about Coinbase IPO, and I can answer that actually. So I did read about Coinbase IPO. For those of you who are watching this, you're not familiar with Coinbase. It's one of the larger U.S. exchanges that allows direct on ramps from fiat currency such as U.S. dollar or euro into cryptocurrencies. So they're supposedly building out for their IPO, I think, in the coming months. I think it's definitely a big deal, and you know, going public puts you on the radar of, you know, many other investors, shareholders, and potential, you know, other institutions and hedge funds. However, I also do know that, just, you know, from a moral standpoint, I know they've been kind of sharing customer information or data of cryptocurrency transactions with the U.S. government. So, you know, depending on your morals of your investments in crypto, you know, it may not be the best thing that Coinbase, you know, will be going public. So I just wanted to answer that for our members. Um, okay, well, I think that's pretty much all we have for the public part of this interview. The second part of this interview will be conducted on the Zoom session that we have, which, again, is going to be for our Advantage members only. We're going to discuss some of the positions that Austin and myself have taken in the market, how we're going to buy or sell short or long going into next week and next couple of weeks. So if you guys want to join, there's a Discord link below. You can come join the free channel. But until then, I will catch up with the public members who are watching this on YouTube next week. And for Advantage members, just stay on and we'll be resuming this video.